Oh, that's weird. Oh, would you look at that? Oh, look at that. The stocks are down. Hi guys, it's Kim back with Kim Tries, where we're all trying to be better adults. And in this particular video, this is the first installment on that adulting series for every Saturday from here on out that I talked about in my last video, which you can find in the iCard above. And this particular video, we're going to start out with stocks. And so with coronavirus and quarantine happening, at the very beginning, people were in a tizzy because the stock market was down and the Dow was down, and we were going into a recession and a depression, and all of these words were being thrown out. And honestly, I was genuinely very confused, but I knew that it wasn't great. It wasn't good for me. It wasn't good for the economy. It wasn't good for my bag. Okay, so I have finally decided to stop living in fear of figuring out the stock market. So this particular video is going to be very introductory. It's going to be like if you were to describe the stock market to a 5-year-old. I'm the 5-year-old, you know, and I just wanted to know the very basics, and I want to share them with you guys. And so I found out I was trying to do like a basic stock market and then basics to investing, and so we'll touch on it a little bit. But once researching, I realized that you could pretty much do a whole separate video on how to like properly invest in the stock market. So if you guys want to see that, definitely comment down below. But let's get into it. So stocks. What is a stock? The definition of stock is a representation of partial ownership in a company. So you can have two types of stocks. So there's a common stock or there's a preferred stock. So your common stock is stock in a publicly owned company that may or may not have dividends. And preferred stock is stock in a company where dividends are expected and they are the exact same amount paid to you by the company. What's a dividend? I had no idea. A dividend is a regular payment that is paid to you by your company, usually quarterly. Companies like Target, Bed Bath & Beyond, PepsiCo, Apple all pay dividends, and it's part of the revenue that they had made using your stock, right? And so you are a partial owner, you deserve your bag. And so they give you that on a quarterly basis. And the benefit of having a dividend is it's essentially a constant stream of income, of passive income, if you've heard that term before, that shows up to you every couple months, and it is dependent on how much your company made in revenue for that particular quarter. Are going to invest more in order to be at that level. So it's kind of like the VIP section of a club for stocks.
She doesn't even go here.
For beginners, the internet highly suggests more of the common stock and just kind of getting in and getting your feet wet on how the stock market works and investing in that, because you can still make money on that, and we'll get into how in a second. So the next thing is, if you guys see me looking down, it's my screen, my notes, because remember we had to take those. So now we know that there are two types of stock, and the definition of stock is partial ownership. So why would a company even want to give you partial ownership of their company, right? So imagine if you're a CEO of company B, and company B costs $700 million to kickstart. A lot of money. Bag is deep. Companies use it as a fundraising technique, essentially. So instead of saying, I'm going to front $700 million, it splits it into, let's just say 700 million shares, because the math is easy. So company B is splitting your total cost of the company of $700 million into 700 million shares. And it's saying if every single person just put in $1, we would still have our $700 million, and I could run my company like I intended to run my company. And so that's what they do. Companies will split into a bunch of different pieces, and people will buy those different pieces. You don't have to only buy one, you can buy multiple. So I can have 4 shares of Amazon. I could have 4,000 shares of Amazon. I think 4,000 seems like a lot, but I think I can do that. And you're just paying for individual shares, and you would own all of that, and then you would make profit on all of that. So that's why companies want it. So then it's like, well, why do you want to be part of a company, or you want to be part of the stock exchange because you have the potential to make money? And it's essentially your money is now working for you and making more money. And honestly, it's about time you're not the only one working in this household. If I invest into company B at a cost of $5, okay, and then in a year, their stock price goes up to $10, and I bought 5 stocks at $5, now everything's $10, I would receive $25 of profit back into my pocket. And I didn't have to do any additional work for that money. My money is working for me to make more money.
Hold up. Wait a minute. Something ain't right.
However, there is obviously risk with such a system. People are not giving out free money for giggles. So the risk that you take as a buyer of stock is if a company goes under completely, bankrupt, zero, company does not exist, you run the risk of losing all of the stock that you put into that company. Or a stock market goes down, which we just saw in the previous months, you will then lose money. So if I bought my stocks in company B at $5 for 5 stocks, and in a year now they're only worth $2, I would lose $15 of the original $25 that I had put in, right? And so you're running that risk of, is it worth it to get return? And typically it is. On average, according to the internet, the stock market is giving back about 10% of your money. Now we've talked about what is a stock, we've talked about why companies would want to have stocks, and we talked about why you would want to have stocks. And I think the next big question is the stock market. Stock market is not like a grocery market in that you can just show up and purchase different stocks off of a shelf. That's not how this works. It's the exchange of stocks. The main stock markets that people reference are the NYSE and the NASDAQ. So those are the typical stock markets that people talk about. And so the difference between those two is, let me read it. That's why I'm looking down, as I don't want to give you guys the wrong information. So a NASDAQ is the dealer's market, where participants are trading through a dealer, whereas the New York Stock Exchange, you hate to see it. So the New York Stock Exchange is an auction market. So it enables individuals to actually buy and sell their own stocks through the process. And so the stock market has its own hours, its own operating hours, like a grocery market has, where you can only essentially do it during the day. And so that's why you have people called day traders, that's their job, is they go in and they trade stocks during the day. So now we know what the stock market is. What about when people reference the stock market is down? So when the stock market is down, they're referencing the market index for that. The typical ones are the Dow, NASDAQ Composite, or S&P 500. 2 other terms that I tended to hear in the last couple months were the bull market and the bear market. So the bear market is what we were experiencing, where stocks were falling. And so everyone was trying to sell at the bottom of, say, a bear market when stocks were tanking and tanking and tanking. That's where you actually want to buy stocks, not sell stocks. So a couple months ago, when everyone was screaming about the Dow and everything was tanking and dropping, that's when you wanted to swoop in and buy stocks. Honestly, right now is probably also not a bad time to buy stocks because our economy hasn't completely recovered. So you want to buy stocks when they're low, so the potential for your profit increase becomes higher over time. You don't want to buy a stock at, say, its peak value of $1,500 or whatever it might be, because if that's its peak value, you're going to only hope that it continues to go back up and not goes back down. The bull market is when stocks are increasing. So the price of your stock is going to increase over time. And so the stock market overall ebbs and flows between bear and bull. And so you're going to have times where your stocks are decreasing. You're going to have times when your stocks are increasing. So you want to buy stocks when it's super, super low. So then when the value of that stock increases, you make more money, which makes a lot of sense, a lot more sense now. And I wish I would have done this 2 months ago. Now we know what a stock is. Now we know why you want to invest in stock. We understand the risk that comes with investing in stocks. We understand why companies have stocks. We understand the stock market. basics and how that works, some key terms, that it goes up and down and ebbs and flows. Now, how do we get into it? There are 3 main tips to start in. The first is that stocks are a long-term game. Most people are not going to outdo the stock market. So a lot of people like to day trade and it works well for them, okay? But for beginners, it's easier to put money into a stock that has high earning potential, or so you think, and let it sit there for 1, 5, 10 years, and then take it out after a long period of time, rather than trying to buy and sell day by day. If you see that your company is tanking, do not wait for your company to go out of business. Sometimes companies fail. You don't want to wait until they already are done to then be like, oops, let me take my money out. So definitely be smart. Check up on your stocks, check up on your investments. That's part of healthy investing. But the key thing in the stock market is longevity. Second tip is you need to diversify your stock investments. So you're not going to want to invest all $5,000 into stock B. You're going to want to invest $500 in stock B, $500 in stock C, $500 in stock D, etc. You're not going to put all of your money into one separate company, because if that company goes under, or if that company has a rough patch, your investments are going to be directly impacted by that. However, if you were to diversify your investments and you put money in certain different categories, then if one company is doing particularly badly, you have the ability for your other companies to make up for that loss in that time. The tip that I have is individual investing takes time. So that's what I was talking about with that day trading, is that takes a lot of effort and takes time to get good at. So you're not going to just wake up one day and be like, am I a day trader? Is that what I am? I'm going to go be a day trader. Watch out, Wall Street, I'm coming. You know, it's going to take a little bit of time. So you're going to have to be patient with yourself and the market in order to really benefit from that process. Now, I gave you the tips. I gave you the background. How do I get started? So the issue I ran into when looking at this is that I can make an entire series about how to invest in the stock market. And I kind of knew that going into it, that it wouldn't be like a simple process that I could like put into a 2-minute little spiel. However, the basics of investing into the stock market are, you're going to want to have a brokerage account. And you can have a brokerage account that is manually supervised by yourself, and you look at all your investments and you decide where they're going to go. Or you can have a brokerage account that is automatically supervised, and usually you can have an internet advisor, typically now at this point. So those are kind of your 2 main options. For me personally, it makes sense to use an app that I've seen a lot of people use. And that's kind of where this video came from, is my boyfriend has been telling me to use Robinhood, that he loves it, for like the last 3 years. I've been a little late to the game. And so when I Googled the best investing apps of 2020, NerdWallet came out with a list of the top 10. And so I recognized 3 of them. So those are the 3 that we're going to try out. So on that list, there was Robinhood, there was Stash, and then there was Acorn. And so over the next week, I'm going to use those 3 apps and report back to you next Saturday about how that went and any helpful tips, because I don't think I can give you super helpful guidance on how to invest in the stock market if I am Googling it and not really doing it. And these seem like the easiest ways to kind of dip your toe into like potentially day trading, but also into like just putting money into an account that you trust and going with it. So that's what we're going to do. We are going to try to invest in the stock market. So I hope this video was helpful. I hope you guys learned as much as I did, because I didn't really know much. I was literally Googling like stocks 101, intro to stocks, stocks definition, what is the stock market? I had to Google the difference between the New York Stock Exchange and the NASDAQ. Like, we were at level 1. So I'm hoping this video got us both to level like 1.5. So let me know in the comments below anything that you would want to know more about. If you want to know the in-depth video about how to start investing in the stock market, again, I'm going to post a video about the different investing apps that I'll use over the next week so that I can at least dip a toe in and let you guys know how that goes. I learned a lot. I enjoyed making this video for you. I think that's it. So I'll see you guys back next Saturday for hopefully I'll be making some money. I'll be partial owner of some companies by then. So tune in for that and I'll see you guys next time.